it's now time to head straight to the market now. TVC's market editor, Effiong, Ekop, joins me in the studio now. Thank you for your time. Well, of course, we saw the market decline yesterday, and when I was speaking to Analyse yesterday, he said that perhaps the market was reacting to the outcome of the MPC meeting, but we'll see the reversal today, 0.67% up. Speak to us about that. What's going on?
Market was down for good 3 days, and Monday through Wednesday. And that made stock prices, especially the heavy ones, cheap within those 3 days. And if you had observed, the negative indicators, they were very, very deep. So the level at which the prices, came down within those 3 days, gave a wider gap, which turned to advantage in price change to, reasonable investors. And that gives opportunity for them, they'll come back, to back. So you can see that even those big banks and manufacturing companies, they are the one playing big in the markets today. Talk about First Bank Group, UBA, Zenith, GT, all of them are gaining, very huge percentages. So that's what we do. Strategic investors took advantage to, move to the big cap stocks that they had wanted. So if you talk about the reaction of the market yesterday, really the negative was that's a kind of frightening situation. That's because we expect that certainly interest rates will be up in some areas and transaction deals will get
because I was going to ask you, perhaps opportunities and challenges post-MPC meeting and how that is likely to impact the sentiment in the market.
Yes. It will take reasonable levels of funds out of the stock market to the money market, because at 22.75%, that's a very high level of interest in the money market. And so those who have already taken profits in some stocks in the market and they have the fund, I think they will find that that is attractive window to also place their funds. That's basically what I understand that will happen in the immediate, term. And then many other things will happen. The manufacturing companies,
right,
if they go to the banks to ask for loans to be able to do things, I think they will have to pay more, because the banks too will react to the prime lending rate, which is not making anything cheap, in terms of rate and money. So that's how it will be. So funds will immediately flow to the money market, because money market instruments will now be, attractive
to investors. But is that a challenge in the equities market, seeing that domestic players is much more, the percentage of domestic players in the market is much more than the foreign players?
Of course, a challenge. Yes, a challenge to a very large extent. Yes, because as at this time, we are still baking the foreign players, to come in and take very high positions as they used to. So those who have funds in the domestic market, they will be caught up with the decision either to stay and play in the stock market and mark time, or to go to the money market and get ready interest rate that is already looking upward.
The argument has been that, since the larger percentage, of investors in the market is domestic, since we have domestic players much more than the foreign portfolios or the foreign players, it means that the market is still fundamentally strong. That means
very strong. But speculators are also within the market. And speculators don't like to keep funds for a very long time. They move even within sectors, within the market. Talk of when this opportunity, looks up and very, very bright from the other side of the market. So you will not be able to stop them to stay in the market for a long time. Don't forget, traditionally, the capital market is supposed to be a long-term playing ground. So speculators don't want to stay for so long. Because even, the reason, the economic situation that we have now, many people want to hold funds. And fast as you hold, you spend because of inflation. Do you understand? So any opportunity for you to earn a higher premium on your investment or the quantum of money available to you, I don't think you will waste time to take that opportunity. So as I said, for me, the window that I have seen is that it's being created, that money market instruments, will draw the immediate attention.
Tomorrow, begins or marks the beginning of the last month of this first quarter. Yes, of course. So, speak to us. Yes, speak to us on that, because the expectation is that we expect.
March is a very fine, a very big month in the market. That's the month that we are expecting that so many of the quoted companies should
start releasing their
their financial results for 2023. We begin to open up and then see. And as it is, whatever happens, if many of them make good yield, on their trade, well, if not, we will still see funds moving to money market. And we also will see a situation where many of the stock prices will begin to come down.
Okay. So let's see how it goes, of course, in the coming days, and see how the market continues to react to.
But I still have to add, that is the character of the market. It has been staying up there for a long time, since mid-October. So you don't expect it to stay for so long. So the market will also display itself. And if it comes down and shows the negative tendency, we have to take it. After all, you had enjoyed when the prices, were up.
Well, I think we should leave it there. Thank you so much for your time. TVC News Market Editor Effiong Ekop. Thank you for coming.